Hello, it's Katrina the advisor coming back to you from the car today. I'm talking to you about Mississippi is talking about eliminating state income tax. And this is really cool, but we know that, is this a financial win or is this setting up for a financial disaster? I am parking lot pimping in my granddaughter's school. She's at soccer practice. So I said, I was planning on making some more content for you guys. Why not do it right here in the car? So here I am today talking to you about Mississippi's state income tax going away, right? So let's talk about, I'm going to share with you 3 pros of how this is going to be a really big benefit to Mississippi. I want to talk to you about 3 cons based upon historical data, because there's several other states. There's 9 states in total that don't have tax on the state side, right? So that's being Florida, Texas, Alaska, Nevada, Washington, South Dakota, Wyoming. Tennessee joined this class in 2021. New Hampshire is talking about passing no tax on dividends and interest, still income state tax, but not taxes on dividends and interest starting in 2027. But Mississippi is talking about kicking this off in 2026. And so this could be really big for them. But you're supposed to use the data that you have from how things have worked in the past to see how they're going to work in the future and to forego some problems, right? So let's talk about what the pros are, right? The pros being really big. Number 1, meaning you're going to attract residents. You're going to attract retirees, because of course retirees, some income, if you're receiving Social Security income at a certain, and you don't have other income mixed in with it, it could be tax-free, right? Let's say you have some retiree income, maybe you have some veterans disability benefits. That stuff is perfect. So then you wouldn't be paying, you would only be paying, maybe you could be not paying income or state tax if you qualify in that area. But it's really attractive, and that's why you have so many retirees that move to tax-free states, because you keep more of your money, right? So Mississippi is joining that ranks, and so this could be really good for residents, but it's really going to be good for attracting new people to the area, specifically retirees. And number 2, another pro, attracting businesses, because businesses have increased sales tax if they're paying on the state side too, right? Income tax. I'm so sorry. Income tax. We're going to talk about sales tax in the con section. So the attracting businesses, and what comes with businesses? New workers, new residents. So win. And then the third win pro is a simpler tax filing, right? So you would only have to file taxes on the IRS side, the federal side, right? No state income tax, unless you're a business and you have to file some sales tax and stuff like that, but no tax on the income. So cool, less compliance checks, less having to gather things and documents and all of that, just a simpler tax filing, right? So pro, attracting new residents, attracting retirees, attracting businesses, and a simpler tax filing process. All great, all really cool. And that's all it works out in the state's favor, and it works out in the taxpayer's favor, right? Let's talk about the cons. All right, let's talk about number 1. What happens if you cut an area, and the road still gotta get fixed? You gotta get the money somewhere, right? So there's going to be an increase in sales tax. We've seen it in other states that have eliminated the income tax. There's going to be an increase in sales tax, and there's going to be an increase in other areas. I was in Miami back in February, and of course no sales tax, no income tax in Florida, of course, but I noticed there's so many tolls there. Everywhere you drive, there's a toll. So they're collecting money in other areas. The sales tax is increased. There's other areas where they're trying to collect money. So this is where you're going to start to see how that bucket refills in another area. And number 2 in the con, and this kind of plays into 1 as well, is a regressive tax burden, right? So the regressive tax burden means that typically you may have people that are lower income end up paying 5 times more, at least 20% pay 5 times more than the top 1%, because how tax works on an income level is you're taxed on your income based upon how much you receive at a progressive level. The first 10,000 is taxed at this, the second 10,000 is taxed at this. So we have those brackets there. If that goes away and the sales tax increase, that means everything that you purchase is going to have an increased price. That is going to impact people that have a lower income the hardest, right? So that's something to think about, because it's going to regress. Whereas if you're a higher income, maybe that won't impact you as much because your income is being taxed. You're not paying this huge income tax, but the sales tax, you may have other options as far as sales tax, where somebody who's lower income is going to get hit really hard if your income, if the tax goes from, sales tax goes from 4% to 8 to 10%, right? That's going to, on every item. That makes a big shift. So that's a huge con, and that's something to really think about. And then 3, another con is the risk of a shortfall, making sure that you're not undercutting what's in the bucket to do the state services. How do you keep the roads up? How do you make sure that the parks are good, right? So making sure, and how do you make sure that you know, just different things that you don't think about all the time, but that the state is actually managing. If there's not that income coming in to help to sustain that, where is it going to come from? And even if you increase the sales tax and you increase other fees in other areas, is it going to be enough up front to cover those services, right? So those are really key things to think about. So here's 3 tips that I have on trying to make sure Mississippi does this right. Somebody send this video to them, so the Department of Revenue, so they make sure they cover this. So number 1 tip is building a rainy day fund. You know, Alaska has the Alaska Fund dividend that goes to the residents every year annually, but that comes from the oil reserve. So building a rainy day fund is going to be really key for a state that is no longer can kind of predict what their income tax revenue is going to be. Sales tax is a little different, right? Because people can start to do a little more online shopping, right? Purchasing things in that way. And so making sure that you have a rainy day fund to cover the cost that you're going to have. The cost doesn't go away. It's just how you're managing that cost goes away, right? And then number 2, this is big, watch property tax creep. Because in Texas, even though there's no income tax on the state income tax, their property taxes have skyrocketed, right? So you may look at the sale of the cost of a property in Texas, and you're like, oh my God, you can get this big beautiful home for $300,000. This would be $2 million in California, but you better check that property tax and then predict and then do an assessment to see how much is going to increase when you purchase it, right? Because just because the tax is what it is when you look at it, when you purchase it, it's a new assessment, right? So making sure that the property taxes don't skyrocket to accommodate this no income tax on the state side, right? And then 3, focus on growth, right? Growth focused spending. The state should be spending in areas that are going to bring in additional revenue, right? Like infrastructure, education, and workforce diversity and development. Those are 3 key areas that are going to help to reinvigorate the economy and bring in additional revenue. And so those sales tax will make sense, and those whatever fees that you come up with, because you know they're going to come up with some fees, whether it's toll roads or something along those lines, but increasing even your LLC filing fees. Those are different state fees that, you know, that can be impacted by these changes. So is it a win? Absolutely. But can it be a disaster? Yes, it could if it's not done properly. So tell me your feedback on this. Are you in a state that has no income tax? And is there a pro and con that I didn't cover that you want to talk about? Leave it in the comments below. And again, I am Katrina the Advisor, and I will be back to you again. Maybe I'll be in the parking lot, who knows? But I look forward to talking to you again soon. Have a great day and talk with you soon. Bye-bye.